Good afternoon, traders. This is TonyD from easyMarkets in the Sydney dealing room. An update for you today regarding some of this movement overnight that's sort of catching traders off guard. Why is the euro reversed so quickly? Why is the pound reversed so quickly? Well, I mean, if you're looking on the 4 hour and the daily, both have been attempting to rally in the first place. But really, the big news that drove the whole market turning around was the release of ECB sources that this is a live meeting coming up in June to be discussing the end of QE. Now, a lot of traders after the Italian incident and generally some of the lackluster data from Europe had been suggesting that they may delay it and be no rush. But with this news, it's really back on the agenda, and with that CPI number that we got really ticking higher, closer to the 2% level, coming in 1.9, it is likely that there will be some discussion at this next meeting and potentially some change in the language of the statement that could be getting traders back on the whole ECB's ending QE, when are they raising rates bandwagon, which was something that was driving the euro back when it was at above 120, getting closer to 125, and is a big story for maybe not this year, but definitely next year if it was to proceed smoothly. Now, if Italy or Spain or Portugal was to rear their head and delay things, then the rally in the euro in general will be delayed. But when things are on track, and you're looking at where the market is right now at 117, if this becomes the theme, then this is the way the euro can rally. And so it's really important to keep an eye on how this develops. If there's denials comes out, because this was another source, another rumor, rather than a straight from the horse's mouth sort of story that was released yesterday, the reaction was very sharp, and the market did surge on it, and it did help drive the Aussie and the pound higher. But we still haven't got confirmation yet, and if it turns out to be slightly wrong in terms of what they're planning, then yeah, you could see the euro give back some of these gains. But if it is confirmed as what is the ECB's plan, then you are probably going to see the euro do quite well in the coming sessions. Now, the pound itself, yesterday we were looking at the pound closer towards 133 when we did this video, and now it's above 134. Now the market itself is looking at the pound very similar to the euro, had heavy falls and starting to recover with higher lows, and those dips are being bought. And with that, any sort of good news really exacerbates the market to the top side. If the market's looking to rally, it will respond to good news, try to shrug off bad news, and that's what's happening in the last week. Definitely noticeable to that extent, but the PMI services number from yesterday was surprisingly strong, a nice rebound. One of the leading indicators that was driving the pound back when it was above 140 was the PMI data being very strong. Now that it's rebounding, there will be questions on whether inflation is going to keep on dropping given Europe's inflation, and whether the economy slowed down in Q1 just because of bad weather. Good data like this definitely adds argument to the case that the UK economy is doing better than perhaps the price at 133 was suggesting. So the market has a little bit of room here, if you're looking on the daily, given the size of those falls, to move up. 134.40 was the previous range low. Break above that would open up the range again between 134.50 and 136. And so that would be the next level to be attacked if the market was to continue this in the European session today. Very important for the euro and the pound to continue to rally today. If it was to stall again, traders will be looking suspect at such movement, because everything here is perfectly set up for the market to rally, and if it doesn't, there's definitely more underlying problems, or the US dollar strength comes back quicker than usual in the market. So, but at the moment, the US dollar is, if you're looking at US data, you may be asking yourself, why is the US data not responding, helping the US dollar get stronger? Well, it is, but those rallies in the US dollar are being sold currently. And you always want to keep an eye on the dollar index to check how that US dollar is faring. And this is the price action last night after the PMI number, which was very strong in the US, and the market didn't hold on to its gains, reversed back into new lows. So this is sort of setting the bias here that 95, which on the daily is a big level. Have to go on the weekly actually to see the significance of it. Has held for the short term. and so it does open up a correction in the dollar, and that's what we're seeing playing out as well. Alright, so it's not just euro strength, pound strength, Aussie strength, it also weakness in the US dollar, all happening at the same time. In terms of other stories, Nasdaq broke to fresh record highs last night. Hard to deny the market's optimism in that particular technology sector. You still aren't seeing heavy gains in US stocks just yet. I mean, you're seeing big gains, but you're nowhere near where we were back at the heyday there, where it was above 26,500. So we still got about 1,500 pips in the Dow to get to the fresh all-time highs, and a lot of room there. And every time the Dow's been rallying, something has come out of the woodworks to sort of knock confidence. And keep in the back of your mind, if you are trading this general risk on theme that has been enjoying the yen crosses, so euro yen, pound yen, and dollar yen, still all going higher at the moment, that if there was to be something that was negative in the G7 meeting or at the Kim and Trump meeting next Tuesday, then the first place the market will be selling in stocks is the Dow and in the yen crosses. So it's something to keep an eye on when you are playing those rather than the majors. Those crosses are much more sensitive to the risk appetite of the market, and so the huge gains we're seeing in the euro yen can be quickly unwound if something was to become an issue. On the euro yen, actually, the key level is about to be tested at 129.05. That was the previous support that held for a few weeks there in early March and April, and so if we were to get above that, it does open up bigger room for the euro and the dollar yen. Dollar yen itself is struggling to get past 110 so far, but that is its key level as well. So everything's sort of lining up in terms of resistances at the same time and at the same point. That is something that happens before the market makes a big move as well. So we'll see in the next couple of days whether it wants to take those levels and then continue this rally that's begun in the last 4 days. Alright guys, if you have any questions, come through, have a chat with a dealer like myself. Aren't a member of the easyMarkets dealing room, open an account and get a dealer assigned to you.